Hi, good morning to everyone. I'm Dr. T. Radhashri, Assistant Professor in Commerce. Today, we are going to see about the ledger in financial accounting. Let me say about what is the ledger. Ledger is a process. It is a first we want to put a journal. Recording the day-to-day basis of the journal, we can able to put a ledger in a particular account. In the pro of the ledger, the cash ledger and the general ledger and the private ledger. These are the types of the ledger. Sales ledgers, the personal account of credit of the customers. Ledger, it is a particular document or particular the product can be settled by the purchase account. We want to know the total purchase of goods for the particular amount. The purchase and seller ledger means we want to know the seller particular amounts of the sellers. And the general ledger, it is can be say of the real account, nominal account. The personal account of credit to the supplier, the personal account of credit to the customers. In that basis of the ledger can be classified in a different category. In what all the journals and the ledgers we can be entered in the day-to-day manner. The journal is entered as a day-to-day manner. For example, we can say the business is going to be started by a particular person. In that way, we can able to say can write the journal recording as a business. It is a common. It is when doing a business or we are putting a cash to their business. It is a capital of the business. So in case the business of the person is coming a cash to the business, for that capital what we want to know, cash account data to the capital account. In that way only we can able to put the ledger. Regarding that purchase account, we can say purchase account data to the cash. In that ways, we want to divide the category of the purchase, what the amount is coming entered to the business, what the amount is going out to the business. In that way, we can able to easily identify the cases of the ledger. The separate ledger, we can able to identify what are the amount coming enter into the business, what are the amount going outside to the business for that particular. For an example, we can paying a electricity bill. Okay, the electricity bill for the monthly basis we can able to calculate and what the amount is going out. At the same time, at the telephone bills, we can able to identify the total month of the telephone bill charges. We can able to calculate. For 1 year also, we can able to calculate regarding the ledger of the support. In that way only we can able to identify the particular things. And the monthly purchase, the total monthly purchase, the amount we can able to identify in the debit side and the credit side. For 3000 means we can able to identify the purchase we have expand the amount of 3000 in the purchase. In the sales particular amount we can say 50,000. In for this month we have sales of the goods in a 50,000 manner. How we can able to identify with the help of the ledger, we can able to identify this the particular amount we can spending for this. The next we can say about the ledger, the personal ledger and the impersonal ledger. In personal ledger, we can say about the debtors ledgers and the creditors ledgers. In an impersonal ledger, we can say about the cash books and the general ledger and nominal ledgers. We can say the private ledger. In the separate categories, we can put the personal ledger into the personal of the real account. It can be taken to the debtors and the creditors ledgers. The impersonal ledger we can say about the cash books and the general books. We can able to identify the normal ledger account and the private ledger account. This is the process we can to get a general ledgers. The ledgers is a nominal basis and personal basis and the private basis. We can be able to calculate in a different basis. The next thing we have to see about the here objectives of the ledger. What is the objective? The main objectives of the ledger is the classifying of the recording of business transaction. It is the main process of the ledger. In the basis, it can be going to the second category of the trial balance. In that way, the trial balance is calculated in the month of the particular years, and the basis of the profit and loss account is can be able to calculated. The profit only we can to able to say the net profit or loss of the business. Finally, we can go to the settle in the here balance sheet account details of the financial information. This is the process we can be accounting of the debtors and accounting of the ledgers, and equity accounting of the equal open operation expensing account. The a normal operation is can be taken to the expenditure of the goods and taken to a ledgers of the process. This is the total of the ledger process in the things of the doing. What's the ledgers? Thank you.